All right, what's going on, everyone? Welcome back to the channel. If it's your first time here and you're new, welcome in. My name is Gerardo. We're going to be talking about HEX in this video, and more specifically, the weekly bullish engulfing candle that we've recently seen. We'll go a little in depth into previous times this has happened, historically speaking, what does this generally mean, and from there you can interpret kind of the data on your own. So I don't have a crystal ball. I have no idea what's going to happen. So keep that in mind. Your generic disclaimer for this video that I am not a certified financial advisor, and therefore do your own research. Take this information as for entertainment purposes only. And let's go ahead and jump into the stats, right? The data. So still sitting at top three crypto by market cap at a $70 billion valuation, and the closest behind us other than Tether is BNB, sitting at about $60 billion. So we flipped BNB a long time ago and we're still sitting pretty at number 3 crypto. Currently, Ethereum's going on a nice tear, right? $3,200, Bitcoin 45K. Nothing impressive. I still think this is a bull trap, right? I do think this is a bull trap. So just, it's my opinion. If there are a few things that could happen that might change my mind, but they would have to happen in the next few weeks. But I do think we're in overall a crypto bull trap. Now, just for the record, I do think that HEX is more or less decorrelated from the characteristic shape of the rest of the crypto price charts. It kind of does its own thing. Sure, every now and then you could bucket it in with the rest of assets when you have a risk-off event, kind of like the March 2020 dip. You saw HEX also fall with everything. But more recently, when all of crypto had this nuts crash of 50+%, HEX held up pretty nicely for a while. And then it kind of followed suit after and had its dip. But overall, it seems to do its own thing. So I wouldn't say just because I'm bearish on, say, Bitcoin or Ethereum, don't take that as I'm bearish on HEX, right? I'm generally speaking, I don't want to say a perma bull, but generally speaking, HEX looks good, right? There have been a few times where you're like, okay, this might dip, but I'm rambling. Let's actually get into the charts, right? So let's start off with some more kind of short-term analysis, and then we'll jump into the weekly bullish engulfing that we recently saw. So I wanted to plot this just because we are currently at these levels. And what is this green curve? This is the 50-day moving average, okay? So after big payday, obviously, you could consider a new era for HEX, and you could argue that this is what the price chart actually wants to do now that it's under its inflation mechanics that it will have for the rest of time. And so you see that after big payday, we pretty much held this 50-day average as either a line in the sand or as support. So what do I mean by that? Well, here, once we dipped beneath it, and I've talked about this before, once we dipped beneath it here at around the 8-cent level, or this wasn't 8 cents, excuse me, this is about 80% of 1 cent. When we reached that level, we kind of had our final sort of reaccumulation in what was previous resistance at about 65% of a penny. This was a very clear level. If you had watched pretty much the price chart back into, like, let me point it out over here, right? So, but I don't want to, here, if you were in HEX, you know what I'm talking about. If not, then all you really have to know, and I'll point it out in the other chart in a second, but it's pretty much the fact that this level was significant, right? And it extends back a little farther, so it's actually a little higher, but more or less this was a significant level, so it was kind of an easy callback here to start reaccumulating. But not only that, we saw this kind of little fake out pump above the 50-day moving average, came back down, and we had this final little reaccumulation phase beneath it to form kind of the left side of a parabola, you could call it. Like if you just look at the kind of characteristic shape, you can see it was kind of doing this thing. But I digress. After that, the next time we tested our 50-day moving average, I don't know if we actually broke fully beneath it. Let's zoom in a little bit to see if it was a fake out or if it actually was a break. So let's see, this opened at 155 and the moving average was at 155. So it was right on it, actually. Yeah, it was right on it. You could consider that a fake out. You really could. And so this little area right here, I'm just really trying to point out why this moving average might have some significance. And then after that, we pretty much haven't tested it since, other than this wick right here, a wick beneath it over here. And then recently we are testing it nicely. So just looking back, right, at times we've either tested it or broken beneath it. It was generally the time to get in. So just want to point that out, right? Yeah, I just want to point that out. Like, it looks most similar to something like over here or like over here, just given where this 20-day MA that I just plotted this blue curve where that is. So it looks most similar to either, again, this region back here at around 1.3 pennies, and or this region over here at around the like almost a penny region. Now, what I find interesting is actually pretty interesting. The fact that it's so similar to over here kind of brings us to the topic of the video, right? 6 minutes in and we're barely getting into the topic of the video. So what is it? It's our bullish engulfing candles. So I want to take you through a little journey of every time we've seen these bullish engulfing candles on the weekly chart. So the way to describe these is pretty simple. This is just a rough explanation of what a bullish engulfing candle is. It's a scenario like this where you have a candle and the candle that precedes it is not only green, but it has a lower low than the previous candle as well as a higher high, right? And key point, it breaks green because otherwise it's a bearish engulfing candle, like something over here where higher high than the previous candle, lower low, but it broke to the downside. So this was a bearish engulfing candle as opposed to something like this. So this was really the first one I can point out on the HEX chart on Uniswap V1, right? The full price history is March 9th of 2020. And that was actually the dip that we saw across pretty much all markets, right? Bitcoin, equities, you name it, back in March of 2020. So that was our first bullish engulfing candle. And you obviously can see what happened from there, right? If you measure from wick to wick, it was a nice 49.9x. So let's just call it a 50x to keep it clean. And then when did we see it next? Well, it took us until about September of 2020. And again, same definition of a bullish engulfing candle. Lower low than the previous, right? And I made sure that I confirmed that that is the case, yeah. And a higher high than the previous candle. So we saw this. And if you take a measured move to see what happened, well, it was a nice 7x, right? And we keep on seeing it. We've only seen a few of these, and I'll pretty much kind of just show you what happened, right? So this next move was about a 6.6x. Now, I don't know what to call this one, right? Because we had our bullish engulfing candle, kind of had our double bottom, and then rallied. So, I mean, you could argue it was a rally of about 3.8x, but more or less, it's generally a good time to, historically speaking, it's been a good idea to get in during these bullish engulfing candles. And the previous one we saw was a nice, what was it? A nice 15.8x, right? So we've seen anywhere from a 50x, 7x, 6.5x, almost a 4x, and then almost a 16x. So these are pretty nice multiples on your money for sure. If you experienced any of these, congrats. I'm sure it feels fantastic. Now, where are we now? We're over here, and last week, right, on Sunday at 5, I think it's like Sunday at 0 UTC, right, when it ticks over to Monday, right, when we actually had our weekly close. At that point, we printed this, and we printed a weekly bullish engulfing candle. So that's the title of the video. It's the main topic of discussion here. And you've seen why it's such a big deal, because we've generally had rallies every single time. So if you take, let's say, even the smallest rally, right, just a 3.8x, this one over here, literally the smallest rally. So yeah, you could argue this was the most bearish bullish engulfing on the weekly scenario, where we didn't rally as much as the other times. And not only that, we didn't immediately just go straight up, but rather we kind of had this little oomph, came back down, and then rallied to just have like a little 3.8x. So if we did just a 3.8x in, what is that, 63 days, then it would look something like this. And we would be sitting at 42 cents by early October. And that's kind of like, historically looking back, worst case scenario. So obviously past performance isn't necessarily indicative of future performance, but as I like to say on the channel, I like to think, I like to imagine a world where history gives you some insight at least. So yeah, 42 cents is a bearish target using this specific model. Right now, I don't want you to say, oh, I thought you were calling for 25 to 55 cent hex based on your bull flag. I actually still am. That hasn't been invalidated yet, to be completely frank. And what am I talking about? It's this move over here, right? And we've talked about how you can decide to either take the pull from this point over here, or from even more back here, or maybe even closer here where the impulsive move kind of started. But regardless, we got our levels from anywhere from like 25 cents was our 25 to 27 cents was our technical target. However, if we double our technical target like we have in the past a few times, then we were looking more so at maybe closer to 50 or 55 cents. Hence that range I give you of my target, my bullish target based off this bull flag model, which is 25 to 55 cents. Now, the reason I bring that up is because, again, I don't want you to confuse these different models, right? These are different models. I don't particularly subscribe to any single one. I like to look at a kind of a spectrum of models and see which ones, for example, are more significant than others. Maybe something like a weekly chart is more significant than looking at bull flags on the daily. I don't know. But again, I don't subscribe to any single particular model. So in this case, we're just looking at this model and saying, you know what, if we had a scenario like this, where a previous weekly bullish engulfing gave us a nice 3.8x, well, that's what it would look like today. It would pretty much put us at 42 cent hex in early October. Now, if you want to go mega bull and look at what is the best case scenario, well, we could say, okay, what if we do a 50x from here? But maybe we can look at second best case scenario, because you could argue we're in a more liquid market than it was back here. Obviously back here it was a little more illiquid, but nonetheless, we'll take a look at both scenarios. So assuming the best case scenario after a weekly bullish engulfing, 50x. I mean, let's see, what would we get, man? I mean, it's just absolutely bonkers. Yeah, this would be bonkers. Just straight bonkers, y'all. In 63 days. Bear with me. Yeah, that would be $5 hex in October. Look, I'm a bull, but do I think we're gonna see $5 hex in October? I don't know, man. That's a tall order. That's definitely a tall order. We would basically have to see a fractal like this. And it's not out of the picture, right? We can look at our LookIntoHex.com models actually to see, is that actually realistic, right? Where does our pink kind of historical maximum level of overextension from our fit, where is that October 4th, for example? Well, it's sitting at $2. So maybe, just maybe, waiting for a $5 hex in October is quite the tall order. But if, for example, we take our theoretical limit as something like this pink curve, then it's moving up every single day. And again, early October, it's sitting at around $2. So maybe that's just maybe that's kind of a sanity check to see where we can actually go. So just to maintain a little bit more of that, let's say sanity, let's look at this move over here after a weekly bullish engulfing, which was a 1,475% gain in 77 days. So that would correspond to, let's see, 1475%, getting it right on the money, $1.74. Okay, once again, I like to use multiple models. So if we were to check this against our regression rainbow, does $1.75 October 18th make sense? Well, let's see, October 18th, we're looking at, yeah, it's not even pink, right? October 18th. So if on October 18th we saw price reach, what did I just say? $1.70. then you'd actually be sitting somewhere in between purple and pink, right? And at that point, I would do my best to be honest with you guys and be like I'm not just gonna say this is the top. I'm gonna say something like, when do we reach that point in time? Like, historically speaking, we've only been this overextended maybe once or twice before, and you saw what happened next. You're in kind of dangerous territory, so just be careful. So I'll probably give some disclaimer like that if we do actually ever hit these purple or pink levels, whenever we hit them, right? Again, they're time dependent. So that's pretty much it, right? I think maybe something in between our kind of most bearish scenario and our most bullish scenario in terms of a rally and what it'll look like would be anywhere from, again, 42 cents to $1 plus. So I guess you can kind of now, across all these models, come up with two kind of separate scenarios, kind of a bullish scenario and then a super hyper bullish scenario. The bullish scenario being, all right, our bull flag says 25 to 55 cents. Previous bullish engulfing candles, maybe 42 cents, right? So yeah, those two models kind of go together, you could argue. And then you could go with the kind of regression rainbow fractal model, more so saying, what if it's a way more best case scenario in terms of what we've seen after weekly bullish engulfing candles, and we see something more like this, right? Where it takes us to our purple or pink levels on the regression rainbow. So yeah, you can fall into either camp. Obviously, there are the camps that say things are going to go flat or down. I don't see it personally. Like, I can't come up with a strong enough argument for that in the charts. I personally just don't see it. I would tell you if I did, but I see the weekly bullish engulfing on the weekly. The fact that not too many people are talking about it, which I kind of like, right? Because if everyone was talking about it, then things get a little iffy at that point. But I like the fact that it's kind of just a subtle weekly bullish engulfing that printed, and I like to see the fact that every single time that's happened in the past, it's just been good news. So that's pretty much what I wanted to cover in this video. Let me know if I want to release a certain chart I haven't talked about. I call it the Gaussian chart, right? I've never revealed it. It was kind of a chart I wanted to keep just kind of in the, in my sleeve, maybe pull it out whenever I needed to. But let's just say the Gaussian chart. I used to call it the Sigma chart, and it's similar to the regression rainbow, not identical, right? It uses a different model. If you're keen in mathematics, then you might know, just based off kind of the names I gave it in the past and what it's currently called, kind of what model it is. Drop your guesses in the comments. How about that? If someone drops a really good guess as to what the Gaussian model is, again, it used to be called the Sigma chart, then leave your comment. Let me know what you think it was, and if I have someone guess it like spot on, I'll be more incentivized to drop it. But I'll probably drop it anyways, but I do want to see if you guys can guess. So yeah, this is the dashboard I have on my quantitative analysis Google sheet. And I have the Gaussian chart isn't the only chart that I have up my sleeve, right? I have a few more. Obviously, the quarterly ROI and your risk metric are on LookIntoHex.com. These are a little less interesting, honestly. This is kind of just a volatility index. I touched on it in a previous video a long time ago. I mean, if you want, I can touch on it again. It's not super interesting. We see these kind of volatility peaks, local peaks. So it's a cool chart to have, I guess. But we also have our price extension from the 20-week, which it looks like we're still a nice 1.8x above our 20-week moving average, which is pretty cool. This almost looks like a bull flag, doesn't it? Yeah. Anyways, yeah, I have a few more charts that I might share in the future. Let me know if you want those, and I'll drop them. But with that said, I think that's all I wanted to cover in this video. Yeah, follow on Twitter if you haven't already. That's twitter.com/Gerardo. I'll leave a link to that in the description below. Also follow the LookIntoHex Twitter. I'm really proud about this one. It's just like something that can live on without me, without kind of my face, my brand. So yeah, appreciate you watching. Leave a thumbs up, subscribe, all that good stuff. Share the video, and I'll catch you in the next one. Peace.